What's up, everybody? Jay Russ here, and welcome back to That Dad Crypto, where we explore the world of cryptocurrency and unlock the potential of the digital economy. In today's episode, we're going to dig into the secrets of mastering long term Bitcoin investment by leveraging the power of dollar cost averaging and minimizing risk. So let's get into it. First things first, let me break down what dollar cost averaging or DCA you'll often hear actually is. Because as you begin to dive into crypto, you're going to hear pretty much anyone who's been around for a while recommend this strategy because it's really tried and true is the best. It's the best strategy. There's people who track if you had dollar cost averaged from the best time all the way back down, like the top of the market, all the way down to the bottom, and then back up again. Like, so say, like, the last market went up to 69,000 and then down to 15. If you had started dollar cost averaging at 69 all the way down and then back up, by the time you got to where we are now at around 30,000, you'd be in profit. So even though you started at 69, you be in profit by the time we got back up to 30. So it's a pretty powerful strategy. So DCA is an investment technique where you consistently put in a fixed amount of money into an asset, which in this case we're talking about Bitcoin, but you can really do it with anything, but Bitcoin is what I'm talking about here. And you just do it in regular intervals, no matter what the price is. This approach allows you to accumulate the asset over time and reduces the impact of market volatility. Now that we have some understanding of DCA, dollar cost averaging, let's dive into the benefits of using the strategy for long term investment. Benefit number one: DCAing helps you basically tame the beast of market volatility, the ups and the downs. It just kind of levels things out for you to get in at a good price. For example, if you buy in at 20,000 and it drops down to 10,000, then your average price wouldn't, even though you bought at the worst time, your average price is significantly less than 20,000. And as we all know, the crypto market can be like pretty crazy. I mean, whether you've been in it or not, I'm sure, especially if you're new, it probably a little more scary than somebody who's been in it for several years, because by the time you've been in it, after you've been in it a while, you almost get desensitized to it. I mean, you do have regrets, like, if I would have just sold a little at the top or a little bit higher, I could have more. But the game becomes accumulating more. It's not a game of fear, it's a game of, could I have more. And so by investing a fixed amount of money at regular intervals, you average out your price entry, which mitigates the risks and just takes out the stress of trying to time the market. Because I mean, there's a lot of people, and there's a lot of value in people who look at charts and do that. That's not my thing. I do have people that I follow, that I respect, that will often get it right, but I never would recommend trading anything that anybody says as far as a specific timeline, like by this date or that time or this price or that. It just, nobody knows. Nobody knows. Benefit number two to DCAing is it encourages a disciplined investment approach as opposed to just willy nilly pulling the trigger. So you have a predetermined investment plan. You're less likely to make impulsive decisions based on emotions or short-term market fluctuations. So a lot of the time, people that they get into trouble, they get excited, all the hype, and then they buy in at a high number, and then it drops, and then they sell, and then so you might have started with $1,000 and now it's only worth $800, and now you've sold, but you got your 800 back, but then it goes back up and you're like, damn. And then you buy back in with the 800, and now you got less, and then that cycle just repeats, and then you leave feeling like the whole thing was a scam. But it's just like, you didn't realize. That's like calling surfing a scam because you didn't know that you didn't have to ride the wave that looked exciting. Like, you could have just floated over that wave, waited for the next wave, Like, just because you don't know how to ride a wave doesn't mean it's a scam. Like, those waves aren't scams out there in that ocean. You just got to know the game that you're playing. So this long-term focus helps you cultivate a powerful and consistent investment portfolio while also offering you time to get to know Bitcoin a little better, because your learning is never done. There's just always more. There just it's just your understanding of all the different things that are Bitcoin. Like, Bitcoin is just so many different things to so many different people, and the more you understand your investment, the less likely you are to be scared during times of negative market fluctuations. And, like, honestly, when I first got in, I went through Coinbase, and they had this limit. I don't even remember. It was like, I might have had like $2,000 I wanted to invest, but they'd only let me put in 500 a week. And it was just frustrating. It's like, I want to put in this whole 2,000. I don't want to miss this thing. I want to miss this ride. But the whole time, my whole first basically 2 years was watching Bitcoin go from 20,000 down to 3,500. So, like, thank goodness Coinbase had a built-in dollar cost averaging, but then the more you get to know, it just gives you time to get to know it before you just, you don't want to marry something you don't fully understand or even understand at all, especially like you're like fear of missing out, FOMOing, fear of missing out on something, So benefit number 3, DCA lowers the barrier to entry for newcomers. Instead of waiting to accumulate a significant amount of money or capital, you can just start investing with smaller sums. So, like I said, like, I had $2,000, but I could start small. Like, so I started with 2,000, but say you want to buy a whole Bitcoin, but you don't have it, so you're just sitting there waiting so you could save up for the whole Bitcoin. Just buy little bits. Just get in. Just chip away at the thing. Invest with smaller sums. Make it more accessible. Let yourself participate in the expanding universe of crypto. Okay, now that we got these benefits of dollar cost averaging in terms of a Bitcoin investment, let's dive a little more into some practical tips for implementing the strategy. Step 1, decide. Pick an amount that you want to invest at each interval. This could be a percentage of your paycheck. It could be just a dollar amount, like $100 a month, or just whatever works for you in a way that keeps you comfortable. Like, don't let it become stressful. If $100 a month is too much, just $50 a month, $25. It was just whatever works for you. That's not going to have you like, I need to sell that because I need to get my money back. So pick an amount and then decide on a schedule. This could be weekly, bi-weekly, monthly. It could be whatever. It doesn't matter. It's just a way to just be disciplined. You got an amount, you got a win. And now, depending on your preference, you make sure and just stick with the schedule and just automate the process as much as possible to avoid missing or worrying about missing anything. And it doesn't have to be as rigid as that. Like, as you're watching and you see days, like, you might be, gonna do it every month, but then all of a sudden, you got 5 days left in the month. You're about to put your $50 in 5 days, but then the price goes down 10% in a day. I mean, you might want to just do that. It doesn't have to be as rigid as that. Like, that might be a better buying day than 5 days, later when it's bounced back. So it doesn't have to be as rigid as that, but, like, I would keep it as rigid as possible, at least for me. Step 3, monitor your investment performance and adjust your strategy as needed. It's essential to review your portfolio periodically. I mean, I've been doing this for years, and it's still the first thing I do when I wake up. So periodically, that's funny. I need to monitor it less sometimes, and just make adjustments based on your financial goals and market decisions. And then there you have it. Pretty much, it's just it's a video I wanted to put out because it's something that you're going to come across, and I just didn't want you to hear people say DCA, DCA, just DCA. I recommend DCA. So now you have some understanding of what dollar cost averaging is, and how to implement it as part of your long-term Bitcoin investment strategy. It helps you minimize risk, promote a disciplined mindset, and get in at a price level that'll have a positive impact on your family for literally generations at this point. Everybody thinks they are late to this game. I don't know anybody who has gotten into this and not felt like it was too late. It's not too late.